In today's episode, I'm going to teach a lesson on price action strategies, and I'm going to use my trades from today as an example of what terrible price action looks like, because today was not a great day for me. But this is important because I want you to be able to understand the difference between a day where we've got really clean price action and a day where we have terrible price action. So I'll be able to show you some of the trades that I took earlier in the week where the price action was much better. So what is a price action strategy? What does this refer to? Price action refers to the way the price is moving up or down. So when we have good price action, this is when we're seeing really nice big moves. We're seeing clean breakouts. We're seeing traditional patterns that we're familiar with, such as, let's just say a nice bull flag forming like this. We get a very nice, clean, orderly pullback like this, and then we squeeze higher as it breaks out. This is nice, clean price action. When we start to get into, I would say, poor price action, that's when we would see, this candle squeezes up and then rejects and ends up closing as a big shooting star rejection. We would call that a false breakout. And the reason is because initially the price broke and it squeezed up and we had a green candle. And so people bought here thinking it was going to go higher, and then immediately it rejects. Now, price action traders typically rely on candlestick charts. These are candlestick charts. This is what I'm using in my trading. This is just a quick sketch of a candlestick chart. So when we're looking at the chart, what we generally want to see are nice, clean, clear patterns. Now, as you know, the market and the financial market, specifically stocks, futures, Forex, we rely on these candlestick charts because they're universal. Everyone seems to use these charts. And so the patterns that form become easily recognizable. And we develop this pattern recognition that, oh, here we go. We're getting our traditional bull flag again. So if we have something, just for instance, that pops up at, let's just say we've got a news headline at like 8 a.m. right here. And all of a sudden, boom, this thing starts to squeeze up. It goes from 3 to 350. Up to 4, 450, etc., up to 5, whatever. Let's say it tops out at 5. We get this little pullback. What we're expecting from clean price action is a nice squeeze back up on the first pullback, and then we look for the second pullback right here, and then we look for another move higher. But what we had today, well, that was quite the opposite. So let me show you this chart to help you better understand a really good example of terrible price action. The chart that we're looking at, this is a stock, and it's got a float of 4 million shares. Now, by the way, some of you guys tuning in, you may trade Forex, futures, commodities, and that's fine because price action strategies apply to all of these financial instruments. You can apply it to anything. Anything that has a candlestick chart, that is. Okay, so initially on this chart, we got this move, as you can see back here, that started at like 7 a.m., and so typically you would think, all right, look at this. We got a squeeze here. First, we got a little sort of pop and drop, and then sort of rally back up to 425, up to 450, up to 550, right? And then it starts to pull back. Now, something that's really important to note about this move, volume looks good. Light volume red candles, high volume green candles as it moves up, and light volume red candles. So everything checks out here, but there's one thing that does not check out. The one thing that doesn't check out on this was that there was no catalyst. There was no news. There wasn't a reason for it to be moving higher. So you look at this and you think, well, that's weird. Why did it move higher? I can't really tell you. I don't really know the answer to that. In fact, today we have 16 million shares of volume, and we really don't know why it went up. However, when we look at this chart, what we know is that this is a recent special acquisition company. A SPAC is a special purpose acquisition company. These are companies that are created with the sole intention of merging with a privately held company. So let's say my software company, Daytrade Dash, was approached by a SPAC, and they said, "Oh, we want to buy you, and we're going to merge. We're going to merge the SPAC with your private company, and then we're going to make you a publicly traded company, and we're going to change the ticker." So when you invest in a SPAC, all investors buy in at $10 a share. And then if they raise $50 million or $100 million, that's how much money is in this special acquisition company. And that's the money that's used to go. So let's say it's 110 million, whatever. That's the money that's used to go buy and find a private company to bring into the public market. and the people who create these SPACs make a ton of money on these mergers. So anyways, this is a company that was a special purpose acquisition. They merged with TVGN. And then once they did the merger, the price dropped from $10 all the way down to like $4. Now it did squeeze back up on this day right here, which was pretty impressive. And then it came quite a bit lower. So to be honest, it's possible that this pop, what could it have been caused by? Well, that first pop could have been caused by some short sellers covering a position. Maybe they've been holding for a while and they covered it. Probably not, because it'd be sort of weird to do that at 7 a.m. pre-market, but it's possible. It could have been caused by a long bias trader who said, I'm going to buy this stock because I like it. It could have been caused by an insider who said, hey, I'm going to add more shares because the price is so low. That's certainly possible. Now, if an insider bought shares, we will see a filing with the SEC, but I think they have like up to 5 days or something like that to do the filing. So we may not see it for a couple of days. And look, if that insider bought 50,000 shares, that could be enough to create that initial pop. And then once you have the initial pop, then from there, well, now people are watching it because it's hitting the scanners. But the fact that this didn't have a proper news catalyst, I think was a problem. So we get this initial move higher, we sell off, and we actually sell off quite a bit. So from a technical perspective, this broke below the volume weighted average price. That's an indicator of poor price action. A positive and a good chart would not break all the way below volume weighted average price. It would pull back, but it wouldn't pull back that much. So it pulls back below the volume weighted average price. It is below the average price of the stock for the whole day. It tries to get above it here, it fails. It tries here, and it does. It breaks 450, goes up to 475, up to 5, and then notice these two candles on high volume. This was sort of the confirmation that this was going to be a really difficult stock to trade. And I actually took my first trade on this, buying at $5, and it pops up here to a high of 529. It drops back down. It pops back up to 529, and I ended up stopping out more or less break even. I lost 63 cents on that first trade. Okay, so that's a break even trade. Doesn't matter. But it was clearly not strong. Now, it ends up going sideways for a little bit right here. And when it starts to come back up again, I was like, okay, well, you know what? I'm going to take a stab at this for the break of this pivot right here. So I got back in as it broke through 30. What happens? It rejects. It doesn't hold. It drops back down. So on that trade, I ended up losing $250. I go into the red. It comes back up again. I try to get back in for the break through this flat top, and look what happens. Once again, it pops and it rejects. So at this point, we have a chart that is not giving clean price action. Now, it's true that the MACD on this was sort of, flat against the trade. Unfortunately, I didn't lose a lot. My total profit on the day is $639, and I lost $680 on TVGN. So the loss is small. And today I didn't get even close to my daily goal of 5,000, but it's a green day nonetheless. I'll talk a little bit more about that in a second. So we had these two rejection candles here, which are sometimes called a tweezer. They sort of look like chopsticks. See how they're kind of these, well, I don't have to explain what those look like, So anyways, looks like tweezers or chopsticks. And typically, you don't want to get poked in the eye with chopsticks or with tweezers. But if you buy the top of this kind of move right here, you're probably going to get poked. It's going to hurt. And that's what ended up happening to me because it already has shown this weakness. So this is not a good thing to see. I did give it another stab because I thought, well, let's just see. It's definitely rallying back up. Volume is coming back in. And my target is a retest of the pre-market highs. But boy, it could not do it here. It just sold off and it went lower and lower and lower. As we got a little closer to the open, we tried to kind of come back up again. I'll show you the chart here. And again, another rejection and a drop back down. So this is a great example of terrible price action. The patterns did not resolve. All right. So, if we're going to sort of quantify what poor price action entails, so no resolution on the patterns. We'll just abbreviate that. Topping tails, which in this case, we got a tweezer top. Huge sellers. So big sellers on the level 2. And we see it on the level 2 in parentheses. We also saw these nasty flushes. Nasty flushes flush / drops. We saw quite a few of those. Unable to hold VWAP. Right? So it's like, this is just bad. Now, this is poor. Now, if we said, what does good price action look like? Well, it's really just the inverse. You've got great resolution. Great resolution. You don't have topping tails. No topping tails. You don't have huge sellers. No, huge sellers. Right? I don't have to write the whole thing. No nasty flushes and drops. So it's literally all of this, but you don't have it. Sometimes it helps to sort of inverse, because if you realize, well, these are all the things that make it bad, then just the inverse is what, in this case, would make it positive. And that is the case here. So TVGN, without a doubt, was terrible. I mean, the price action on this was just awful. And as the day went on, it just got more difficult and it just sold off. And I'm glad that I stopped trading it. So one of the strategies that I'm implementing in my own trading is each day I focus, to give you a little context, on trading for income. When I first started trading, I didn't have any other source of income. So I was 100% dependent on producing profit every single day as a trader. I had a goal of making $50,000 a year as a trader. So that meant $1,000 a week, roughly $200 a month. Now, some of you might be thinking that's kind of a low goal. I don't know. I think you should set it a little higher than that. But hey, give me a break. I set it at 200 a day. I was happy with that. Okay, and I was also pretty young. I was in my 20s. So my goal was 200 per day. And I knew that I needed to be very consistent with that, because the profit that I was making from trading was going towards paying my bills. So I was living off of my trading income. What that meant was that I couldn't afford to take a lot of risk. I had to be very conservative. And there were times where I saw other people who were able to afford to take risk, taking some high risk trades and getting paid for it, and getting rewarded. But I also saw, certainly, my fair share of people who took high risk trades and got wiped out and got destroyed, and their account was gone, and now their livelihood would be gone. Well, if that were me, because this was what I was depending on. So I knew for myself, I had to keep my head down. I had to be like the turtle, not worry about people racing past me, just focus on me, hitting my consistent $100, $200 a day goal. And some days I would hit 300, I'd hit 400. Some days would be better, some days would be worse. And I had to be really good at being able to recognize, is today a day with clean price action, or is today a day that's choppy? Because when it's choppy, sometimes the safest thing to do is just to kind of hunker down and seek shelter from the storm and not try to put your hand out there and get slapped. When it's hot, on the other hand, that's when it's time to take a little bit more risk within reason and be a little more aggressive. And so for me, my spectrum of, taking risk, like going from like hot to cold in terms of how much share size I'm going to take, all of this is probably a lot smaller than someone who is comfortable taking more risk than me. And, that's fine, because we all adjust our trading strategies to our risk tolerance. So for me, today, I sat down on my first trade on TVGN and I went red. So I'm starting the day, and now by the way, I've scaled my goal all the way up to $5,000. Okay, so my daily goal is now 5,000. I've moved it up a little bit, which is great. I've been doing this for more than a decade. So the daily goal has gotten bigger, but I'm still very focused on being consistent. And on my first trade, I went red, $250, something like that. And then I actually think I was green for a second, like by 100. And then I was back to red, about $500. All right. I took another trade, and that was the trade that I took on, let's see, VVPR, where I made $206. So I was still down 300 on the day. I still wasn't making much progress. And then I took my first trade on TCBP, which I'll show you in a minute, and I lost 400 on that. So I was down 700 on the day. And at this point, I started the day with a maximum position of 5,001 share, because I said I don't want to take big size until I first given myself a cushion of profit, and the profit level that I was targeting was $1,000. Once I've got $1,000 of profit, then at that point, I'm going to take this cap off and I'm going to start trading aggressively. But until I can get first that cushion, I'm not going to be aggressive. And so I traded with small size, 2,000 to 5,000 share positions, sort of this whole way down to minus 700. And it's a good thing because if I had traded with full size with this type of price action, I could have easily lost 2,500, 3,500, or even $5,000. This did not warrant trading with big size. Now, when we finally had TCBP pop up, TCBP, to be honest, was not very clean price action either. It put in a nice move, but it wasn't super clean. So when TCBP first popped up right here, I actually bought it at 183 for the break of 2, and it flushed down here and stopped me out for a $500 loss or $400 loss. And that was the point where I was down 700 on the day. That was my lowest point. And I took that trade with 5,000 shares. When it came back up, I got back in with 2,500 shares because was getting close. I was like, I'm not feeling it. I'm struggling today. So I got back in with 2,500. It ends up going higher. I take a little bit of profit out. I take a little bit more profit out, a little bit more profit out. And then look at this. Do you remember that candle that we talked about before? You get that nice move up, the pullback, and then rejection. That is a rejection candle right there. That's nasty. And you know what? This one, I took this trade right here. I was getting in. I was looking for the move to the high, and it rejected, and I got out immediately. So I didn't lose on this trade, but this was sort of the caution flag. At this point, I was like, this is going to be me with a sad face. All right. So I was like, no, this is not good. Gosh darn it. We didn't have clean price action on TVGN. And now here's TCBP showing this similar chop. Choppy to start the move. It quickly pulls away. And this one did have news. But anyways, then you get this rejection candle on high volume red. Now the MACD crosses over. And we go into this period of chop. Chop, chop, chop. So now there's no trades on it. I can't do anything with it. Now at the open, honestly, I was surprised. I did not expect it to squeeze up here at the open, given the price action pre-market. This choppy price action, this rejection at VWAP, I just didn't think it was going to happen. But it did. It squeezed up. The next thing you know, it's hitting a high of 292. But it consolidated in this area for quite a while. In fact, I was a little concerned that we were going to have one of those jackknife candles. But if you watched my episode on avoiding false breakouts, what you would notice was that I commented on how important it is to look at the MACD. The MACD was in favor of this trade. And so my final trade on it, I got in here at 290 and I sold as it squeezed up to 317. And that, put me up. And again, I only took that trade with 3,000 shares. But that put me up $600 on the day. So, and then it kind of pulls back. It's not able to hold up. So this was unfortunately just a day where we did not have really clean price action. This move, it's okay, but it wasn't great. A bunch of topping tail candles, a bunch of bottoming tail candles. It was popping, it was dropping, it was very thickly traded. It felt like playing tug of war. Now, if we look at VVPR, just for instance, VVPR, I did get a trade on it today, but and that, by the way, was right here as we came up to 7. I had been watching it for this break of this consolidation here, so I took a little trade in that area. Anyways, only $200 of profit, small trade. But if we look at yesterday on VVPR, VVPR had news that came out right at 8 a.m. It squeezes up, pull back, pop higher, pull back, pop up higher, pull back, nice move higher. It was a little choppy, but it was pretty clean. Now, the reason this was a little choppy yesterday was because the first day of price action was the previous day. So day one is typically the cleanest, and this right here was one of our cleanest moves that we've had all week. This went from $1.50 up to $5.50. It pops up, it pulls back, it rallies higher. I got in there for the break of 3. It squeezes up to a high here. We get a micro pullback, and then it pushes higher. Again, those of you guys that haven't already downloaded my micro pullback strategy PDF, I'm going to pin it to the top of the comments. It'll be in the description so you can download that. And that's going to give you a guide of really how I'm getting in and out when I'm seeing this pattern forming, because this is my favorite pattern to trade. So as a price action trader, I like focusing on micro pullbacks when something is moving very quickly. And then once we get into these periods of consolidation, it gets so much more difficult. For me, the cleanest trades always tend to be at the beginning of the move. And then, the second leg higher is okay. It definitely pulled away on some high volume. But that first leg was the fastest, and that's almost always the case. This was the fastest move, and it was on relatively light volume. They move quickly when they first start, when the news first comes out. So this was an example of what I would consider to be pretty clean price action. I mean, we had a nice move. We had news that supported the move. The MACD was open, which was in favor of the trade. We only had one red candle, and it was on lighter volume. We didn't have any nasty rejections, but we ended up getting one later, and that was right here. So see that candle right there? So look what was happening in this area. Now in this area, we got this move higher and then a big rejection. And it comes back up, another rejection, back up, rejection, up, rejection, rejection, rejection. And it finally breaks and does an even more dramatic rejection. The MACD at that point was against the trade. The volume was showing high volume on red candles. And this, unfortunately, it was too weak. Now, the fact is, we don't know why there was so much selling on those candles. We don't know if there were insiders taking profit. We don't know if the company was selling more shares onto the open market in, a direct offering. It was part of a secondary offering. We don't know if it was a market maker, a big hedge fund shorting. We really don't know. But what is clear is that there was way more selling volume than there was buying volume. And when that happens, the price action becomes choppy. And so this had nice price action at the beginning of the move. It continued a little higher, and then it started to get choppy. And what I noticed here also was that it was getting somewhat crowded. And when we talk about a stock being crowded, what we're really referring to is that there's so many people trading it that you're seeing a lot of big orders flowing through. And it's a mix of buying and selling. Like it starts to become a tug of war. Some people are like, I think it's gonna go higher, and others are like, it's gonna go lower. And when that starts happening, all of those orders sort of compress the range. It gets tighter and tighter and tighter until it just sort of stops moving. And then people give up and they kind of stop trading. Now, when they give up, it's kind of like an arm wrestle. It's like a tug of war. It's a battle. And then when you give up, it's either to the long side and it pulls away, or it's to the short side and it breaks down. But what's more often is that it's to the short side and it breaks down. And the reason that happens is because the very nature of tug of war indicates that the momentum and trend has stopped, especially after a really nice move higher. We had a really nice move higher, and then the momentum just sort of died. It was gone, right? All of a sudden, we're just going sideways. So buyers are no longer interested in buying this, and shorts are starting to think, well, this is up quite a lot. With a stop at the highs, this might work for a reversal back down. Now, I guess it might have stopped them out before it dropped, which is sort of adding insult to injury. But nonetheless, it did pull back as the day went on, at least until sort of in the afternoon. So I would say this was a pretty good example of clean price action, where we got nice, clean resolution. We had some good patterns. They resolved the way I would expect them to, and I was happy with that. But yeah, once we got further in the day, the price action changed. And that can happen. You can have a day where the price action is really clean at the beginning of the day. You have nice resolution, you have clean patterns, everything that we've already discussed. And then it shifts. For whatever reason, the stock becomes crowded. It's too many people kind of fighting for the same little sliver of profit. And it stops being clean. And if the news catalyst is really, really strong, that will be enough to keep people buying and to force shorts to cover. But if the news catalyst isn't strong, or just the sentiment in the market isn't strong, we're not going to see that. And we're going to end up most likely becoming choppy and then rolling over as the day goes on. So this was VVPR. Let's see. CXAI was another one that we had this week. This one, let's see if we have some good candles. So let's see. This price action yesterday was not particularly clean to me. It's sort of very whippy. It comes all the way below VWAP. It comes back up, back below VWAP, back up, back below VWAP. That a lot of topping tails. That's not clean. Didn't like that there on that day. If we go back a little bit further, though, this one's been in play for a couple of days. Another word to the wise is sometimes when you have something that's in play for several days, as the days goes on, as the days continue on of momentum, it starts to get choppier and choppier. This one, even at the beginning of the move, was a little tricky. And the reason it was a little tricky was because it kind of started by making this quick move on breaking news. So it squeezes up. Okay, so that's nice. Micro pullback here at about 330. And then it pushes higher to 350, 360, kind of stalls out. Dips down, 2 light volume red candles. That's fine. It pushes higher. And then this candle here, shooting star on high volume red. First warning sign. It grinds higher on light volume, and then boom, second warning sign, another high volume red candle. Coming to the open, we pull back all the way to VWAP. We pop up, we drop down. And I really think that shorts felt they were in control on this one. With those high volume rejections pre-market and pretty high volume selling at the open, it wasn't looking good. And this is something that can be very frustrating, is when a stock just starts grinding. Now, are these candles super clean? They're not. You know, we get a little grind higher and then a sell-off, right? High volume red candle. And then it kind of grinds a little higher and then dumps again, right? So this is not clean price action, but it's also not dying. It kind of keeps going just like a little higher, and this can be really hard to trade, both to the long side and the short side. People who short kind of keep adding, but they're just not getting the resolution they're looking for. People who buy keep buying, and they're not getting the resolution they're looking for either. And you just start to be like, what is going on with this thing? But next thing you know, it's at 605, 618, 660. Okay, now it's moving away a little bit, but this is as the day goes on. And then look at this rejection candle, right? Another big rejection candle right there. So it feels like once you've had a couple of those rejection candles, there's a high likelihood they'll keep happening. Again, in my episode where I talked about how to avoid false breakouts, I said they are more often to happen when the MACD is crossed over against the trade. So just using MACD right here can help you avoid getting caught in false breakouts like this, false breakouts like some of these ones back here. Well, this one was a little bit funny. This one right here, this one right here, this one, you wouldn't have missed. That one was a little bit different. But the really dramatic ones are when you have got that period of consolidation and it breaks out and does that. Those are just awful. That was another nasty rejection there. That's not clean price action. That's the type of stuff that's going to get you caught. It's going to get you in trouble, and you're going to lose money. So for me today, as I started trading, I had my max at 5,000 shares. And unfortunately, on my first, back to the whiteboard. On my first couple trades, I ended up, going down, jumped back up for a second, went back down, went up for a second, went back lower. And I was like, I am definitely moving in the wrong direction. Now, I could be doing this with 20,000 shares, or I could be doing it with small size 5,000. And it's much better that I do it with 5,000. Once I got myself up to 600, I started thinking, okay, maybe I'm starting to move in the right direction. If I can get myself up 1,000, then at that point, I'm going to take off my cap. I'm going to trade aggressively. And that's how I usually make my way up to the $5,000 daily goal. But what ended up happening today was I got up to 600, and then I started just looking around at the price action, and I was like, I don't see anything to trade. The leading gainers are choppy. We have some stocks that are popping up, but they're not obvious. I think I'm playing with fire here. I think this is going to be a day where I'm better off just walking away with small profits. And this is a conscientious choice to be more conservative and say, you know what? A small green day is good. I'm going to lock that up because, hey, if we look back on the week, how have I finished this week? Monday, Tuesday, Wednesday. Yesterday was 4,300. Tuesday was 3,200. I think Monday was 4,000, something like that. So we're already at like 11, 12,000 on the week. This is a good week, right? 12,000 a week, 15,000 a week. You're talking about $50,000, $60,000 a month. That's $600,000, $700,000 a year. Now, is it all a little short of my $5,000 daily goal? It is these last few days, but look, I'm not going to be too picky about that. This is a little aspirational. It's what I'd like to hit each day, but I'm totally fine with locking up, 3,000, 4,000 and calling it a day if that's when the market starts to cool off. So when it comes to my position sizing, I'm starting each day with small size, cap of 5,000 shares until I break $1,000 of profit. And if I never break 1,000, I will not increase my size. Now, this is something new. It's not something I used to do. It's something I've just started doing in an attempt to mitigate my drawdown. Because what I have found is in the last, the last month or so, I've had a number of days where I came in on that first trade with 15,000 shares and I went red, $10 or $15,000. And now I'm so deep in the red, I'm emotional. And once you get emotionally triggered, you get emotionally fueled, things can start to unravel really quickly. And that's what happened to me several days last month. I had 4 days where the cumulative loss of those 4 days was nearly $40,000. That really hurt my month. That was not good. And I said, I can't let that happen. I really don't want to let that happen ever again, but certainly not for a long time. So I said, let's test out this new strategy. Max share size of 5,000 until I hit my first $1,000 of profit. Once I cross that level, take off the cap, trade aggressively, right? Market's on my side. And then once I give back, approximately 15 to 20% of my profit, walk away there before I give back more. Alternatively, if things just start to get slow, price action starts to get choppy, walk away there. If I have 3 losses, 1, 2, 3 in a row, 3 strikes, you're out, walk away there. So I have a couple different rules that I follow for when to walk away. And I also am recognizing that my window begins at about 7 a.m. and ends at about 11 a.m. So if I'm right here at 11 a.m., well, to be honest, if the market was really, really strong, that'll be a day where I'll continue trading. But most days the window closes around 11 a.m. So coming into 10:30, what I should probably do is put the cap back on my account at 5,000 shares. So if I take a couple more trades, I can make a little bit more, but I'm not going to risk doing one of those right before my window is closing. So this is a strategy that I'm implementing right now with the goal of producing more consistency. And it means that on days like today, I have to be very cognizant of the quality of the market. Is this a day where we've got great price action, where I am in the zone? Or is it a day where we're seeing a lot of chop? Because today we didn't have good resolution. We had a bunch of topping tails. We had huge sellers. We had nasty flushes and drops. We were unable to hold the VWAP. And that was just on the specific stocks I was trading. Now, if we talk sort of big picture, we didn't have today an obvious gapper that everyone is excited about. The leading gappers in the market, the leading percentage gainers, they were only so-so. People weren't really enthusiastic about them. This is something that's interesting. On a day where you have sort of 5 stocks that are moving up, let's just say, for instance, you've got 5 stocks that are moving up. You've got all the traders out there, and now their attention is dispersed. Some people are on this stock here because it's, it's like a 50 cent per share, 50 cent stock, something like that. So some people like cheap stocks. Then there's going to be some other people who are like, oh, I really like, the Donald Trump stock, DJT. That one's volatile. And then because that one's in play on that day. And then someone else is like, oh, well, I really like NVIDIA, right? NVIDIA, whatever it is. And then someone else is like, oh, well, we've got a couple of small cap stocks, between 5 and 10. But then some of them are easy to borrow, right? So now you've got shorts. So this creates divided attention. When you have divided attention, each of these are going to get, 1/5 of the volume, 1/5 of the attention, 1/5 of the eyes that you would get if you had a day where you had one really obvious stock. You have one really obvious stock, like we had VVPR, just for instance, earlier on the week. Everyone is focusing on this. It's the leading percentage gainer. It's got a news catalyst. It's obvious. And this is when we're going to see the cleanest patterns. This is where we're going to see really super high relative volume. Really high relative volume. Now, let's actually check that just for a moment today. So the relative volume on TCBP is 247. That's not bad. It's a little low compared to what we've seen on other days. The relative volume on TVGN is very high. In fact, this might be the highest volume day TVGN's ever had. So TCBP, you can see volume's a little lower than this day back here. If we're looking at the daily chart, volume is a little lighter. It's not nothing, but it's a little lighter. TVGN, because it's a recent IPO, probably very, very high volume candle. Yes, very high volume relative to what it's had in the past. However, without a true catalyst, I think too many people were happy to sell into this move. Maybe even insiders at the company. I don't know. We're not sure. But so relative volume, I think the issue here was that we didn't have a clear news catalyst. And then some of these others that are on the scan, ALUR, it's a 31 million share float. It's got 27 million shares of volume, so it's much more thickly traded. This is going to be choppier. The imbalance between supply and demand is not as significant. You've got supply of 31, demand of 27 million. It's equal, right? So it's moving higher, but it's not a strong imbalance. Now, TCBP has a strong imbalance. It's up 81%. But again, unfortunately, on this one, for whatever reason, it just got really choppy, got really crowded. And the thing that we don't know, you can have all the technical characteristics of a stock. You can have the price, the percentage change, the float, the relative volume. But those alone aren't what create the big moves. Those are important, but there's something else. It's what's the quality of the catalyst? What's the historical chart look like? What's the historical price action look like for the stock that you're looking at? And what's the condition of that company? Is that a company that needs to raise money? Because then they may sell shares onto the market. Is that a company that has a lot of insiders who are able to freely sell shares into a big move? Because they might, right? So those are the dynamics that are different from company to company. And, in a really hot market, you could see a company that doesn't even have the best characteristics or the best dynamics and still it makes a big move. And in a cold market, you can have a stock that everything looks great, but you have a lot of people who have a short bias. The longs are more conservative, and as a result, you just see more selling. And when that's the case, there's nothing you could do about it. So one of the things I said to myself today as I was sitting down, I said, look, let's think about, rather than think about where I'm at on the day, because on the day today I was down, minus 250 at one point. And part of me was like, oh, that's annoying. And I said, no, it's not annoying. Look, you're up 12,000 on the week, and you're down 250 right now off of that top. This is a perfectly respectable spot to walk away and to call it. You do not need to overtrade. You do not need to make this a green day. There is such a thing as a successful red day. A successful red day is a small red day that's well within your risk tolerance, that doesn't exceed where, your max loss. You don't go revenge trading. You don't go crazy. You just have a small loss, and that's totally okay. In fact, the better you get at having small losses like that, ultimately, the more successful you'll be in your career, because it's days like today where, you're down 250 and then you're like, shoot, I really want to be green today. And then next thing you know, you're down 700, and then you're down 1,000, and then you're down 5,000. All of a sudden, it starts to get bigger and bigger. And in one day, you've given back everything you've made on the whole week. And you did it on a day when the price action was terrible. So being able to capitalize on price action requires a very honest assessment of the condition of the market today. And if the market is not hot, the best thing you could do is just step back, slow down, and be patient. And that's exactly what I did today. Now, I'm saying all this and trying to really emphasize it because it's something that I'm working on in my own trading. I have a tendency to be really aggressive, and that's what allowed me to make millions and millions of dollars of profit when the market was super hot during 2020, 2021, 2022, et cetera, during that sort of window. But that's not the market we're in right now. And I have to remind myself that I still have the goal of producing consistency every single day, just like when I got started. And so kind of going back to my roots a little bit with that, instead of coming out of the gates swinging hard, I'm trying to be a little bit more conservative on those first couple trades. I'm trying to kind of test the water and see, how does the price action feel? Is it clean? Are we getting nice breakouts? Or the second I'm getting in, am I buying from a hidden seller? Someone asked me today, how do you identify a hidden seller? And I said, well, the way you identify a hidden seller is when you see a lot of green on the tape and the price doesn't break. So right there, you're seeing green and the price isn't breaking. Now you can also see, in this case, you've got a huge stack of sellers. This is now very thickly traded. This is indicative of a very crowded stock. 74 million shares of volume. And because of free commissions, I think this has changed how some stocks behave, because with free commissions, you have people that buy, sell, buy, sell, buy, sell inside every candle. They're like, just hyper, super active traders, trading maybe 1,000 times a day and just trying to scalp like half a penny, half a penny, half a penny. And, you do that enough times, it can add up. And I think all of that has sort of filled in a lot of the liquidity which is good if you want to get in and out of a huge position and hold it for a long time. But it's also brought the ranges in and kind of slowed everything down and made everything a lot more congested. And that may be one of the reasons that I find I'm having the most success at the very beginning of a move, regardless of what time the move occurs. The move could occur later in the day, but just the beginning of that move, that first leg, seems to be the cleanest. And then I think as more traders start seeing what's going on, that this stock is up a lot, they start filling in with all of their orders. And what also probably happens is there's a certain degree of high frequency trading algorithms that join on as well once you cross certain volume thresholds. And now it just starts to become a tug of war. So one of the things that means is that there's a window each day for me of when I make the most, but there's also kind of a window on each stock of when I make the most. And what I want to try to do is be aggressive in that window on that stock. So break the ice. If I can get myself in the green, I'm up more than 1,000 on the day, scale up real quick so I can capitalize on that move. Now, I don't want to go into that first trade with huge size because I don't always know for sure if it's going to hold or if it's going to, flush and reject on me and show poor price action. So if the price action is good, I want to lean in, be aggressive, and trade as much as I can in that first leg of the move, kind of before the MACD crosses over, before it starts to get congested. And there are times where we'll have something, let's see, GXAI or GCTS. I could show you a bunch of different charts, but some of these moves, like on this day here, this ended up going from the previous day's low of 250 all the way up to nearly $20 a share. It rolled over eventually, but it still went up, over 1,000%. That's huge. Then we had GCTS. This one, I mean, these are some serious moves. This went from less than $10 a share to over $50 a share. And that was all basically the front side of the move before it rolled over. So VVPR, that chart I was showing you before, that one went from, whatever it was, $2 to $5. That was good, but it wasn't anything outrageous. It wasn't anything I'll, remember for weeks and weeks to come or years to come. It was no GameStop. It was a nice move, but it wasn't anything crazy. So the thing is, these are the base hits. You lock up the base hits, you lock it up, you get disciplined, you don't overstay your welcome. And then every now and then, you're going to see something like a GCTS or a GameStop, and those are the ones that just add icing to the cake. But here's the mistake a lot of traders make. A lot of traders will overtrade setups once the price action becomes poor. Once they start to become choppy and they're going sideways, they're still overtrading them. And what do? They're giving back profit. They might be up, whatever it is, and then they have one big loss. And then they're trying mentally to get back to here. And so they take a little more risk to try to swing back up and they take another big loss. And now they're down here and they're like, well, shoot, to make back this much in one trade, I'm going to need to take a lot of risk, right? So they take a lot of risk, it goes the wrong way, and next thing you know, they're down here with another big loss. And I have seen that happen a million times. And I've done it myself. It happens when you're too emotional at the top. And this is the crazy thing is, by this point, for some people, the very fact of having given back that much, you're going to be past the point of no return emotionally. You're going to be fully just tunnel vision on recouping this loss right now. And when that happens, that's when you spiral, because now you've allowed emotions to take over. So one of the things that I've been doing that I found really helpful is I'm journaling each day. So I've got my journal up here. Oh, maybe it's a little hard to see. Anyways, I've got my journal up on this monitor here, and I'm journaling the days and noting sort of my P&L, my biggest retracement intraday. Did I have high emotions? Did I lose emotional composure? I'm trying to put together as many days as possible without losing emotional composure. And I'm talking, noting my best trade, my worst trade, and then taking notes on the day, because I want to develop the highest level of awareness possible to how I'm feeling each day, to my emotions, and to the condition of the overall market. The better I can get at that, the better I'll be at easing off the throttle when things get cold and then leaning back on when things start to heat up. And ultimately, my own P&L is somewhat of a reflection of how certainly I'm doing in the market, as long as I'm trading calm, cool, and collected. If I'm trading emotionally, then I'm trading erratically, recklessly even, and my P&L will not necessarily be a good reflection. I could be red on a day that there was a lot of opportunities because I mismanaged risk, got emotional, and made mistakes. But as long as I'm calm, cool, and collected, my P&L is going to be a good reflection of the quality of the market for my strategy. So when the price action is strong, that's when I'm going to lean in, I'm going to be aggressive, and I'm going to try to add icing to the cake. So what a lot of traders do, they overtrade during these choppy periods, they dig themselves a hole. So, they end up, maybe having a little bit of profit and then going red and then losing a little bit more and then dipping down more and more. And then we finally have, that GameStop, or we finally have something like GCTS that goes from $10 to 50 in one day. And, maybe they trade it really well, but all it's doing is bailing them out from all these losses. They're just getting back to flat. So what I want to see you guys doing is focusing on your small base hits. So maybe you have some days where you're, sideways, or maybe you have small losses. You're like, this is gonna be a successful red day. There's not much happening today. And then you're sort of sideways like this. And then we have, that nice trade on GCTS. And then you go back into trading sideways, right? So it doesn't have to be like, a perfect straight up equity curve. It could be a little choppy, but what I want to see is that generally you're making progress. You're not having big drawdowns. You're keeping your losses super, super small. The smaller you're able to keep your losses, the more emotionally composed you're going to be. And the fact is, the smaller your losses, the easier they are to recover from. When you have a red, like today, if today had been a red day and I'm down $300, $700, I can recover that so easily in one trade. Like, it's so easy when the market's hot, when the price action is strong. So learn to recognize the difference between good price action and bad price action. Take your own P&L, starting each day with a small share size. Once you get yourself up to a quarter of your daily goal and the market's hot, lean in, be aggressive. If you never get to even a quarter of your daily goal with small size, today it's not going to happen. Try again. Doesn't matter. You can't force it, right? If the market's not, if the opportunities aren't there, they're not there. Your best bet is to wait until tomorrow. And if you're having a hard time being patient and having the discipline to sit here and not trade, get up and walk away from the computer and don't come back until tomorrow. Do whatever you have to do. Discipline is key. So I hope you guys found this episode helpful. I hope you hit the thumbs up. I hope you subscribe to the channel. If you want to download my micro pullback strategy PDF, it will be pinned on top of the comments and in the description, so you can download it, print it out, and you can utilize that and start implementing it in your own trading. But I'll remind you, as always, trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you back here for my next upload real soon.